Well, hey everybody, thank you, for joining today, and thank you, Manny, for the introduction. Excited to have this conversation today and talk about year end. It's definitely it's an always interesting time of year as we're starting to really gear up for year end right now. Yeah, I was just talking with Mandy right before we kicked off. It's kind of odd because today I'm located in Jacksonville, Florida, Northeast Florida, so we happen to have a hurricane that hit this morning south of us, and everything's fine, power's good, and all of that for me right now. But it's I can't quite remember if I've ever had a year-end webinar at the same time getting hit by a hurricane. So I think the timing of the hurricane threw me off a little bit this year. But having these conversations this time of year is definitely something that we've been doing for a long time. I joined Greenshades back in 2009, so I guess celebrated 13 years with Greenshades not too long ago. Love being at Greenshades. It's been an awesome organization for many years, and had the opportunity to work with many great customers and partners, of course, like SIS over the years. My background at Greenshades has kind of been really all over the place. We were pretty small, 10, 15 employees, something like that when I first started. But my background prior to coming to Greenshades really in like hospitality and restaurants and finance, more on that side. So it's been interesting over the years, but really have had the opportunity to become really quite passionate about payroll and taxes and compliance, which has been, a lot of fun. And I've had roles both on the sales side, but then also had roles overseeing the product team for a number of years, and our compliance team and quality assurance team. So it's given me a lot of just kind of, I guess, breadth and exposure to all the different things that we have going on here, but not only what we have going on at Greenshades, but obviously the challenges that our customers are dealing with. So I love compliance, I love payroll, taxes, and so yeah, this is always a good and enjoyable topic for me to talk about, and I hope that everybody will find this valuable today, and we can have some good discussions and questions, and hopefully everybody will leave here today feeling a little bit more confident going into year end than perhaps you started the day with. So, and just to have some alignment here as we kick things off. So, really big picture, it's all about year end. I mean, we're, of course, gearing up for year end right now, but really specifically, what are the things that we can start doing right now, kind of in advance as we're preparing? Obviously, best practice, we want to try to get started on things as early as possible. And then, of course, it's always pretty popular to talk through kind of what's new with the tax forms with W-2s and 1099s. It's not been as crazy of a year as some years when new changes are rolling out, and frankly, I'm okay with that. I imagine most of you are as well, especially with the last few years with all the different all the new regulations that organizations have had to comply with. So we'll talk through that a little bit, and then touch on 1099s and 1095Cs, and of course save time for some Q&A. But before we get going too far, we are going to start things off with a poll, which is always nice to see how folks are feeling and kind of who's in attendance today. So the question should be showing up on your screen right now, and just simply a question of how long does your W-2 production take? Some of you may not specifically be dealing with W-2s. Perhaps someone else deals with that. You can answer this regarding 1099s, or you can leave it blank, whatever you feel more comfortable with. All right, so thanks for completing that. Yeah, so I mean, just about an even split. So I mean, we got a lot of folks that are working on W-2s all throughout the month. Some folks getting it done in about a week, and then some of you are lucky enough to have it done in just a day or two. So nobody selected less than a day. So I guess not surprising, but I'm sorry. Sorry for that. But who knows? Maybe if you're not working closely with Greenshades on the year-end process today, maybe maybe in the future you can get it down to less than a day. So really today, again, really focused heavily on the year-end discussion. Not going to go too heavy into Greenshades and what we can do or not do or anything like that. But I do like to set the stage in case you are not too familiar with Greenshades and you're really talking to Greenshades for the first time today, as you were kind enough to join this webinar, and just a little bit about Greenshades. So I talk about payroll a lot. We really, we think in terms of payroll, and we got our start in compliance 20 plus years ago. Now, really supplementing other kind of third-party payroll systems to really take on some of the most complicated compliance concerns, complicated taxes, garnishments, different requirements around union pay and different things of that nature that we were able to assist with over the years. But then that just kind of kept expanding. And so at this point, really we can assist with kind of that entire employee life cycle, hire to retire. So, I always say, obviously, getting employees paid is really important, both in terms of following the law, and then also, you tend to churn out employees if you're not paying them. So important to get those employees paid, but in order to get those employees paid accurately and timely, there is a lot of critical things that need to go right before payroll ever starts, including the onboarding process, getting all the new hire documentation together, and all those good things. And then of course, time and attendance, making sure that we know an employee's working and how many hours they're working. And then of course, once we're processing payroll, there's a lot of tax liability there. So obviously ensuring that the taxes are withheld correctly. And then ultimately those taxes need to get handed off to the government because that's a pretty significant part of their funding. And so ultimately, Greenshades can assist with all of this, kind of everything end to end, or depending on what your particular needs are, we could, or maybe today are already working with you with maybe just a subset of these things. I mentioned, we've been around for 20 years now. I've been fortunate enough to be here for 13 of those years. We did really get our start early on the taxes and compliance. So specifically, we were really taking data out of these payroll systems and converting it into an electronic file format. So that way, organizations that perhaps were required by the federal government or later on by the state governments to say, hey, instead of submitting these tax reports on paper, we need you to submit these electronically. And realistically, I wrote a kind of a blog on this topic probably 4 or 5 years ago at this point, but I was really surprised when I started doing a little research for that blog. I did not realize that e-filing, the concept of submitting taxes electronically, really got started in the early 1980s. And so even at that time, 4 or 5 years ago, I was arguing that, hey, this isn't a new thing, right? Filing taxes electronically has been around for a really long time. But as the government and all of these entities kind of beefed up their infrastructure over the years, they got better at taking that data electronically. And eventually, you kind of got to that point where organizations and governments could receive data electronically more efficiently than they could on paper. So then things started skewing to where, again, government agencies were requiring organizations to file electronically. And I mean, it's no different than like in our personal lives, right? I mean, at this point, it's a lot easier to get an email or a text from someone than it is to get a fax, right? You get a fax, and the next thing you're going to do is scan it in and put it in your computer so you have a digital file of it. So that really expanded over the years, because initially it was focused on taxes, and then as the needs of our customers grew and evolved over the years, we of course took that feedback and tried to develop our solutions to match, of course, in partnership with SIS. And then final brief thing to note on here, just a simple legal disclaimer. We have a lot of expertise at Greenshades. We're proud of that expertise. We do everything in our power to make sure that the information that we're providing is accurate. At the end of the day, this isn't formal legal advice. We're always going to recommend that you're going to consult your legal counsel if you need assistance with that. We have a partner, my HR counsel, that we partner with. They can assist with that. But I will note that as we're going through these changes, we're referencing where this information is coming from. And the good news is that while some of this stuff is complicated, the sourcing is really not. Because when you're talking about tax requirements related to year-end tax reporting, it's pretty cut and dry based on in relative terms, it's pretty cut and dry because of the IRS documentation, that you can point back to. All right, so let's kick in here to some things we need to get started on right now. So again, being today in this live presentation, we are in November. And so really now, again, is the time that we want to start doing everything we really can in advance of year end to start gearing up here. So first and foremost, just to start with here, one of the things that's always really important just to be aware of as we're going into the new year, and as we're beginning to kind of prepare to reconcile in Q4 and get ready to generate these tax forms, we need to make sure that our Social Security wage base is accurate. So we need to make sure that, of course, the wage base is accurate for 2022, our current calendar year, so that we can ensure our withholding is accurate, and we're ultimately going to be reporting everything correctly to the IRS and Social Security Administration. But then looking ahead for 2023, for next year, we need to ensure that our wage base is updated for that as well. And these are things that, depending on what system you're using, in some cases that can be a little bit more tricky than others, thinking about the timing and after you last process your payroll and when those tax updates are applied. There's different things to consider there, but just purely from a compliance perspective, this is definitely something that you'll want to have on your year-end checklist, just to ensure that, hey, you're checking that box and we're getting those wage bases updated. Another thing to think about, again, as we're headed into year-end, whether this is your 10th year-end that you're going through with your organization, or your first, maybe you're brand new into your career dealing with payroll, whatever it might be, these are all things that they're always going to be reminded about, and things that we want to think about going into the new year. So in addition to the Social Security cap that we just talked about, the wage base rather, the 401k contribution limits are something that typically change year to year, not drastically in most cases. We're seeing a little bit higher upticks this year than in prior years, and in part perhaps driven by inflation and some other changes in the market. But as we are looking at just our standard employee deferral contributions, right? I mean, this is age 49 and younger, so not for the folks that are in that catch-up contribution. There's an additional catch-up contribution limit that's available for them. But for 2023, $22,500 is the new number, so you can see it went up a couple $1,000s over 2022. And then for the employee catch-up contributions for the folks age 50 and older, they can add a little bit more money into their retirement account to help get them beefed up for retirement. That cap has gone up as well, from $6,500 to $7,500. For the box 12 codes, we have some of the highlights right here. We've also linked within the slide deck to the W2 instructions, and the full box 12 listings are split out there. This is this is nice for some of the newer or less used codes. We just have this here as a quick reference with at least this description as well. Again, for quick reference, what is this used for? Is this for 401ks, Roth contributions, kind of what is this typically applied to? But all of those codes can be found, and depending on what system you're using, this may be really easy to accommodate, or obviously maybe a little bit more complex. But a lot of times with your systems, you might have a payroll deduction code that can be mapped to a particular W2 box 12 code. So hopefully this will be fairly cut and dry for you as you're preparing for year-end and generating those W2 forms. But certainly this is something you want to pay attention to when you're generating those W2s, to make sure those box 12 codes are aligning accurately, because of course there is critical information there that we need to communicate to our employees, to our recipients, that ideally we want to get correct first time around, so we can avoid having to do any kind of corrected W2 forms and W2Cs. Another thing to note here, again, just kind of going through some back-to-back items here on our slides. So, and of course the slides will be available to you to reference in the future after the discussion today. But as we're going into year end, another thing to keep in mind is that Medicare, that additional cap, or that additional threshold, for the folks that are kind of the higher earners, those folks over that $200,000 in a calendar year, there is that additional 0.9% that needs to be withheld. So you still have your standard 1.45%, but then anything over that $200,000, just on the wages in excess of that, you don't have to, retro apply that to wages under $200,000. But just once that employee has exceeded $200,000, all the wages over that, at that point, you're going to be taking a little bit more money out for Medicare. This is not new. It doesn't feel like it was that long ago that this went into effect. I remember being in a compliance room talking through this at a conference that we were at related to payroll, and this had been announced, and we were kind of going into the first year end, and there was a lot of question marks and concern. And that was really years ago at this point. So hopefully everybody is aware of this, and of course already has good mechanisms in place for tracking that. Another one that we have in here, this is something that there are some changes year to year. Sometimes the specific dollar amounts do vary a little bit, but in general, just this topic can be something that's a little bit complicated. So imputed income, I feel like I've had a lot of discussions over the years where, that might sound like a certain thing, or maybe you first look at it and you think that it's something obvious, but then once you get into it, there's a little bit more calculations that you need to do. I would say that with imputed income, the group term life insurance we have this listed at the top. I mean, that's, I think, where this most comes up, probably most regularly in discussions. That's typically the discussions that I typically have with clients, is related to this, as they're talking through potential solutions for this related to benefits, primarily for those group term life insurance. But you want to make sure that that's configured correctly, and then again, for any employees that would fall under any of these thresholds, you just want to pay extra close attention to this, because again, this isn't something that necessarily impacts every single employee, and then there are some instances where these highly compensated employees may have some additional complexity that you'll want to look out for, and so that is just something to be aware of, and again, dig into that a little bit further if that's not something you're very familiar with or comfortable with today. All right, so before we jump into what's new with W-2s, we're going to have another poll question here. Are you required to e-file? And so while everybody completes this, one thing that I'll note is that in theory, this should be a relatively easy question to answer, but there are some additional complexities to this year, which I'll touch on in just a minute. So I guess there's your tease. So you don't hop off the webinar right now, but let's see, I did not even pay attention as the results were coming in there to see. It looks like the majority of you are required to e-file. So yeah, so good news. Hopefully you already have a method in place for doing that, or are actively looking into that right now. Okay, so what's new with the W-2? So one thing to start off with, and I think this was actually new last year, if I'm not mistaken. Some of the years the dates get a little bit confusing because this first rolled out for 1099s and then was later applied to W-2. So apologies if I misstated this. Maybe the first year, or maybe it was last year that we could start truncating W-2s. I think it was last year, but nonetheless, as we are looking in general, big picture, right? Tax forms, I mean, this is very secure data, right? I mean, this is really, really confidential information, not what I'm talking about, but just, on the actual tax forms themselves. The W-2 form has really, really sensitive information that, the bad guys would love to get a hold of and go out there and submit fraudulent tax returns. And that's in fact what they do, right? We see that every year. We hear instances like that, which is awful, anytime that happens. And so anything that we can do as employers to stay ahead of that, obviously we want to do that. We want to try to be as secure as possible with how we're distributing these forms, and again, whatever we can do to kind of suppress that. So one of the things that came about with this was the ability to truncate the Social Security numbers on the W-2 form. So if you are distributing the W-2s, one thing I'll note, I mean, if you're using Greenshades to distribute the W-2 forms, this is a setting. So if you're not sure where to go for that setting, let us know. You can reach out to our support team. and we can show you how to do this. But whether you're using Greenshades or not, you have the opportunity now to truncate those social security numbers on the recipient copy. So the W-2 that you hand to the employee, it does not, it can have the social security number truncated. Obviously, the employee, when they're completing their 1040 and their personal income taxes to the IRS, they'll supply their social security number. But the record that gets submitted to the government, it does need to have that full social security number. So you can't truncate it on the copy that's going to the government, because obviously the government needs to know which record to align that with. But you can truncate the social security number that's going out on the W-2 itself. So that way, if you were to mail the W-2, if it got lost in transport somewhere, the opportunity of a bad person getting a hold of that and doing bad things with it at least reduces a little bit if the social security number is not on there. Obviously, if you're distributing those tax forms electronically, that's potentially an additional way to avoid that, in addition to truncating the social security numbers. If you have the recipient's consent to view those electronically, you don't have to mail a paper copy. So that is one way to help cut down on that potential fraud a little bit. So just be aware of that. That is an option. The employer ID, the EIN, that needs to, of course, be on the W-2. That can't be truncated because the employee will need that when they are going to submit their taxes. And then just a brief note here about the states. We tend to focus, because we do have employees clients rather in all 50 states. We do tend to focus primarily on the federal regulations in these discussions, but there's a possibility that state to state the regulations could shift just slightly, right? So you would want to check that out to make sure that you're meeting those guidelines. But generally speaking, truncating those social security numbers is going to be a pretty safe bet for that. And again, that was something that in the past, a couple of years ago, had been rolled out for the 1099s initially, and now we can do the same with the W-2s. Another thing to, of course, touch on every year as we're talking through this, depending on the timing of really when January 31st falls each year, whether it's on a business day or a holiday or a weekend, that can impact kind of the timing of when these recipient copies and e-filings are due. But for tax year 22, as we're going into calendar year 2023, the recipient copies and the copies that go to the government, as a reminder, they're both due at the same time now. They're due at the end of January, by January 31st. As a quick reminder, in case you don't remember or you're not aware, this is all in an effort to protect the employee and that information that's getting submitted to the government. Talked a moment ago about fraudulent W-2s. You also have fraudulent tax returns that folks try to submit to the government to get big payouts, right? They steal somebody's identity and they submit a 1040 to the IRS saying, oh, here's my bogus W-2. I did all this. I had all this money withheld. And their goal is that as a bad guy, I could submit a tax 1040, submit a tax form to the IRS and say, oh, my employer took out all this money from my paycheck, so I'm owed all this money back, right? And they want to get a big old refund that gets sent to them. And then the real person comes along at the end of January or February, whenever they go to do their taxes, and lo and behold, they find out, wow, someone's already submitted taxes under my name, and then it's a whole tedious process they have to go through to get that all sorted out. I've known people that have had gone through that. It's not a fun thing at all. And so what the government started doing was saying, okay, we want to make sure that employers submit these taxes to us as soon as possible, these tax forms, so that ideally when the IRS gets a 1040 from an individual, and this individual says, I worked for, Greenshades Software, and I made, $40,000 this year, or whatever it is, and they withheld, $4,000. Ideally, the Social Security Administration wants to share the W-2s with the IRS, so the IRS can validate that. They can reconcile and say, yes, individual, you say you made $40,000 from Greenshades Software, and in fact, Greenshades Software, your employer, also submitted your W-2 with their W-3 file, and good news, that aligns, so everybody feels comfortable, issuing that refund. That's the general idea behind all of this. The challenge with this, though, is that it does really force you to get everything correct in January. Again, why we're talking about this stuff now is because you have that really limited window of time to get all these W-2s processed. And in the old world, when W-2 forms didn't need to be issued to the recipient until the end of January, but you had until the end of March if you were filing electronically to the Social Security Administration, that was, I mean, roughly a 2-month window that employees could come back and say, this W-2 is not quite right, I need to make this correction, or my address is wrong, or my Social Security number is wrong, or whatever it is. Now, you have a much more limited window. So the goal is to get that recipient copy out as soon as possible in January, so that before you issue that file to the government, that recipient has the opportunity to come back and let you know if there's any kind of issues. Because ultimately, it's once you file to the government as an employer, it's a little bit harder to correct that later on. You can do it, you can correct it. It's just a little bit more work, and so it's best to get it right, ideally the first time. And that's really where this where this electronic consent comes into play, so that in addition to this tight timeline, when you're saying, hey, we have to issue the recipient copies out in January, if you have employees that have consented to receive those forms electronically, that's just one less thing for you to do in January, because you don't have to worry about actually printing out that copy of the W-2. They can just view it electronically. So there's some very specific language that the IRS makes you follow in order to claim that you distributed those electronically. If you distribute those electronically through Greenshades, obviously we manage that. If you were using someone else, of course, just make sure that they are following those stated guidelines. Okay, so I've actually kind of indirectly talked about this a little bit. So, well, this is the Taxpayer First Act, and I guess then there was another act related to the security side of things and the fraud prevention. But then on the Taxpayer First Act, this is kind of related. This is when I was talking earlier and teasing that hey, the e-file thresholds might change this year. So historically, for many years now, the regulations at the federal level have said, okay, if you're submitting 250 or more W-2 forms or 1099s, you need to file those electronically. If you're at 249, you're good, you can submit on paper. If you're at 250, you need to file electronically. This is per form type and it's per EIN. So if you have two different companies, both with 200 W-2 records, technically neither has to be submitted electronically. You may choose to because it's a heck of a lot easier, but you wouldn't technically have to. What the Taxpayer First Act did is essentially mandate, or the intent was to lower this threshold in 2022 to 100 or more W-2 forms, and then in 2023 lower it even to a lower threshold of 10. So if you even had just 10 W-2 forms, you would need to submit electronically. Depending on what state you're in right now, maybe you're in Florida, you don't even have state income taxes, but if you're in a state where you have state income taxes, you may have seen, it's quite possible that your state already requires you to file electronically if you have 10 or 15 records. So the states have been dropping this threshold a lot over the years. The federal government has not. There's been a ton of conversation about it, and every year it's like, oh, will they, won't they? We're not really sure. There's talk about it. This seemed to be the first time that we got really close to this. However, and we included a link to it right here where you can go in and the actual, within the notes, included the actual just text on there. But as of right now, the requirement is still 250 or more W-2s. So this is something the IRS controls, and we can have whatever laws we want, but until the IRS issues any final regulations indicating that threshold is dropped to 100 W-2s, that 250 or more threshold still applies. So some of you may be really familiar with this. Some of this, you may be lost at this point. And you're like, I don't even know. I file electronically. It doesn't even really matter. But had a similar discussion to this conversation just a couple of weeks ago with some different folks, and one of the feedback, from one of the individuals, she was just saying, hey, I was super confused by this, right? Because she's kind of in that threshold where she's been filing on paper. She intended to continue to do that. She typically does around 100 W-2s, so she was right on this threshold, and she was concerned that that she was going to get in trouble for submitting it. So it's one of those things right now. It's as of right now, as of at least yesterday, last I checked, that's still what the thresholds are. They haven't changed. So if you have 249 records, as of today, it looks like you can still submit electronically. Will that change before the end of January? I don't know. It's possible. Something to keep an eye on. Obviously, as many of you can know, because a large percentage of you are already required to e-file, e-filing is easier, especially if you have the right solution. So even if you're at a number that's below that 250, you might want to consider e-filing anyways. Okay. Hope I didn't go too long on that. That is something that has caused a lot of confusion, and so wanted to spend at least a moment on that. So we talked about deadlines, talked about e-file requirements. Well, what happens if you don't follow the rules? Well, you get penalties, and of course, just like everything. So the penalties have increased, I think, a little bit. I don't think I have the prior penalties on here for last year. I think some of these went up just a little bit. But the main thing is, hey, make sure you submit the tax forms on time, right? And then ideally accurately. But as you start getting really delayed, then you can get into these big penalties. I would say that the biggest thing that I would really focus on, and it probably isn't happening much with W-2s at this point. I saw it personally quite a bit with 1095-C forms, but it's that intentionally disregarding the filing. So if you intentionally do something wrong across the board with the government, that's really where the kind of the those caps come off, and they're like, okay, forget these kind of maximum penalties that we have in place. We're going all out if you've intentionally tried to in their eyes kind of cheat the system or whatever. So obviously W-2s, again, a little more straightforward. 1095-C forms are a little more complicated because it's like, oh, who's a full-time employee, who should get one, who doesn't. W-2s, anybody that worked a day for you that you had classified as an employee, that you weren't treating as a contractor, that you withheld taxes for, that needs to be reported on that W-2. We talked about W-2s, big picture. We talked about a little bit about kind of things to start planning for and what's new with W-2s. And I'll take a little bit of time to talk about what's new with the 1099s. All right, so just like with the W-2s, I talked about this for a bit with the W-2s, so we're good here. But similar to the W-2s, with 1099s and 1095-Cs, you can truncate the 10. You can't truncate your EIN, but again, if that 1099, it might have a taxpayer identification number, it might have an employer identification number, or it might have a social security number, right? That's the thing about 1099s, you kind of never know. So that all can be truncated, but again, the copy going to the government and your employer identification number cannot be truncated. I wanted to highlight this. These are very, I would say more rarely used tax forms. However, the IRS, irs.gov, which they've been doing a lot of work to over the last few years, they introduced some new fillable PDF forms this year. So if you deal with any of these tax forms and you need to submit those, a lot of times these tax forms are using data that's not necessarily coming directly from a payroll system, maybe massaging data coming from various different systems. So a lot of times, you might be an opportunity where it's not too bad just to use a fillable PDF for this, and that's available on irs.gov. Similar to the W-2s, talking about the Taxpayer First Act and all the different incentives over the years to reduce that e-file threshold. As of right now, that threshold is still 250 records. If you have 250 or more records, you need to file electronically. If you're below that threshold, you don't need to. As of today, again, pending those IRS final regulations, perhaps they could update their requirements to meet those new guidelines, but they haven't yet. All right, so when are the returns due? Again, January 31st this year is not a holiday or a weekend, so those recipient copies are due on January 31st, generally speaking. There are some exceptions to these. I think the 1042 is one of those. You're probably more familiar with that if you're dealing with those types of tax forms, but the majority of 1099s, including miscellaneous and NECs, non-employee compensation, 1099s, those recipient copies are due at the end of January. Now, the copies to the government, with the exception of 1099 NEC, those recipient copies are due in January, but again, the files to the IRS, if you're doing it on paper, you have until the end of February. If you're filing electronically, you get until the end of March. With those 1099 NECs, though, we do call it out in bold right here. You can think of these basically the same as W-2s, right? This is information that's primarily getting reported to an individual. They're not a business oftentimes. They're they're an individual that is needing to go ahead and submit that information to the IRS, and so the IRS is looking for those 1099 NECs as soon as possible from you as the business. So not only are the recipient copies due in January, but those files, including the e-filing, that's all due to the IRS in January. So again, NECs, they're equivalent to W-2s in terms of their due dates. I want to touch on the combined federal state filing program. I want to make sure we have time to have aside for any questions that are coming in. But just a note on this, the combined federal state filing program is not new. If you're not familiar with it, and I'd recommend you check it out. It's in IRS Publication 15. You can read about it. But in short, the idea here is that for states that participate, if you include the correct level of detail that the participating state would need on the 1099 record, then the IRS effectively receives that file from you as the business submitting to the government, and the federal government, the IRS, effectively just kind of forwards that information along to those participating states. And it's like, hey, whatever, hey, Michigan, I don't know if Michigan participates, but hey, Michigan, we see that this employer or this company is reporting some records that have Michigan on it. So boom, here you go. We'll forward this along to you, and that way Michigan, in that example, gets what they need to get. Last year, for the first time, so this will be the second time that this is supported, but I think last year for the first time, the non-employee compensation form was added to this list because the 1099 non-employee compensation form is newer in general. It's only been around for a few years. And so if you have NECs and if your states that you're in participate in the combined federal state filing program, then that's good to be aware of. I'll mention that if you're using Greenshades for 1099s, a couple things to note here. We build our products to the federal specs, so we don't officially support state 1099s. We don't, look at those specs. We don't build out e-files for state-specific guidelines. However, we do include the information, as long as it's in the data set, we do include in our e-file the information that the IRS would need in order to forward along to states that participate, including the state codes. So we have all that information. So if you're using Greenshades and you're in states that participate in the federal state filing program, you should be in good shape. And then here is just the list, which again you can find in Pub 15, but the list of states that participate. And oh, good news, my example was not terrible because Michigan does participate. So there you go. Some more information on this. Again, I already talked through a lot of this, but that'll be here for your reference in the future. I mentioned, okay, the sufficient information has to be included in the tax record, and again, if that information is coming from your accounting system, you're tracking that, you have that information, we'll grab that, and obviously you can edit that information as well. So once we pull the data from Microsoft Dynamics or whatever it might be, if it's a direct integration, obviously we can pull that data out and you can edit it as needed, or if you're providing that data through a CSV or an Excel spreadsheet, obviously you can edit those details as well, just to ensure that we have all the information that we need. So we're talking about B records and K records, and again, ultimately this is just saying, hey, the states that states need information. And of course, some of those states don't participate in the combined federal state filing program, but some of those states will take the same format as the IRS, and in some cases will just strip out any vendors from the file that don't belong to that specific state. So check with your state if you have any concerns on that. You've got a lot of different options. And then this is just more kind of an FYI, but something that I've always found really interesting. It's not real time that the data gets submitted to the states. So if I submit a 1099 file to the IRS and I'm including information that includes that's identifying participating states, the IRS, I could submit it, in January. The IRS isn't forwarding that information along to the participating state until early April. So it's not, not an immediate thing. Okay, so just to touch on here for the 1095Cs, just briefly, the instructions are still in draft at this point. That's not uncommon. That seems to be kind of the thing since Affordable Care Act really started and the 1095C forms were created. It was always just kick the deadlines down the road and keep these things in draft states for as long as possible. But overall, based on the state side of things, it didn't really seem to be anything too significant that was changing with the 1095C forms. No new codes this year, line 14, line 16 codes compared to some years in the past. And then our deadlines still apply of, hey, recipient copies need to go out in January, and then the filing to the government is due by the end of February if on paper, or the end of March if you're filing electronically. All right, so before we start wrapping up here, one final poll question, and the question is, how do you distribute your tax forms? So electronically or on paper? Kind of exciting watching those results come in. I feel like it's like election night or something. Inevitably, it always comes up, so we included this information here as well. You may or may not be using Greenshades today for distributing your tax forms. If you are, again, there are means for distributing these tax forms electronically, especially with the W-2s and 1095Cs. That's really popular. 1099s, if you have like a vendor portal, we have opportunities for sending the data to that. But especially with W-2s and 1095C forms, really common and popular to have those recipient copies distributed electronically. For anything that needs to be issued on paper, though, you of course can print yourself, or if you want to have Greenshades print and mail those tax forms for you, we have these rates posted right here. The dates, the pricing and date range, this is based on the date that you release those forms to Greenshades. So step one, you upload those forms into the Greenshades database, and then you review the totals, verify things look good, do whatever you need to do with them, make edits, etc. And then you go through the mail wizard and say, okay, here's the forms I want Greenshades to mail. You click submit, you get a confirmation. Whatever date that happens, not when we mail them, but whenever you submit them, that's the date that we'll use to determine the price. I'll also call out here that looks like we missed the mark on updating the date here related to the discount. So I know we had a early or a discount running for early prepays. I'm assuming we'll still honor that in some capacity that, of course, you can talk through with the SIS team. And then, finally, just to kind of end on here. So within Greenshades, talk a lot about our experience. We've been in this space for a long time. I've been really fortunate enough and honored enough to be at Greenshades, for many years. And literally, actually, yesterday I was looking for the PowerPoint in anticipation of today to check something, and I just quickly searched, SIS year end in my Windows browser, and I had all these old PowerPoints that were popping up, 2015, 2016, 2017. So it's kind of fun to look back at the past, and some things remain very similar year to year, right? There's always complexities, there's always challenges when it comes to compliance, but these regulations are always changing, technology is always changing, the environments are always changing. Clearly, just look at the last 2.5 years, things have changed quite a bit. But Greenshades has been here through all of this, and of course working with excellent partners such as SIS. So I think really, when people come to me and say, hey, what makes Greenshades different. You know, Greenshades has been my family for a really long time at this point, and you know, I can honestly say, I mean, we work really hard for mid-market companies. That's really kind of what we're focused on. But we pay a huge amount of attention to employee empowerment, employee engagement, and you know, that's internally at Greenshades, and we feel like, hey, if we take care of our employees, we're going to take care of our customers better. And if we take care of our customers, you know, it's easier for you to take care of your employees. And so always keeping those employees in mind is really important. And then of course the compliance. I always go back to the compliance because that really is how we got our start, and that is something that we just know down to the core and that we're extremely passionate about, and have a huge number of dedicated individuals that are very passionate about that. And our compliance team is, you know, fantastic. And I have to say, before I led that team, you know, I didn't really appreciate it. I didn't appreciate how much work went into that. So it's pretty remarkable, everything they keep up with. And then of course, that all rounds into best-in-class support. You know, so we have, of course, good surveys and everything else. But we've, you know, we've got 3,800 plus customers today, and many of whom have been, you know, at Greenshades, working with Greenshades for longer than I've even been here, which is pretty awesome. And I think that, you know, speaks volumes to not only you know, Greenshades, but then of course the folks at SIS who we've been able to partner with for so many years. So with that, I mean, I'm sure Mandy, you might have a couple words to wrap up on, but I mean, I can genuinely say I just really want to, you know, thank everybody for joining today, and certainly if we have any questions that have come in, I'm happy to answer any questions as we're gearing up for year end.
Yeah, thank you, Chris. Gosh, that was a lot of information, but really great stuff. Just a reminder, obviously, if you didn't catch all of those dates and charts and infos, you'll get the recap to lean back on. Take a moment now, if you've got a second. If you didn't get a chance to drop your questions into the box, feel free to take this opportunity now. I do have just a couple of questions, Chris. One in particular, do we have to obtain consent from employees to send them their W-2s electronically? Interesting question.
Yeah, good. That's a good question. So you don't have to get consent from the employee to send them the W-2, at least at the federal level. Sometimes the states might have tricky things to be aware of, but I think thinking about how you would be distributing those obviously is something to be very mindful of. So there are kind of restrictions related to that. But if you want to avoid having to issue a paper copy, then you do need to collect consent from that employee that they're willing to receive that tax form electronically. They're basically saying, hey, that's fine, I'll take this form electronically. I don't need to get it on paper. So just making it available to them electronically isn't sufficient. You do have to collect that consent. And there's pretty specific guidelines on what the IRS, you know, makes you do in order to take that as a consent. If you're using Greenshades, again, we'll track that. We do both consents when the employee views the W-2, but also we'll get what we call like pre-consents. So before you even get into January, you can have a new hire that goes through their onboarding on Greenshades, and we'll ask them, hey, do you want to, you know, go green, save the world, you know, get your W-2 electronically? And they say, yeah. And so, you know, we'll put up the specific message that the IRS requires, verify they have a PDF reader, and then at that point, they're good. And so we capture that consent, you can report on that. So then in January, whether that employee actually views that W-2 form in January, it doesn't matter. We still have that consent. And then from there, it's optional. If you want to issue it on paper, you can. If you want to do it electronically only, that's sufficient at that point as well. So hopefully that makes sense and answers that question.
Great. And then one more. Can we have Greenshades print just some of our W-2 forms, or is it all or nothing?
Yeah, so it's not all or nothing. You can, you know, kind of decide what you want to do. So I guess when you're thinking about, you know, when we're thinking about, I won't try to jump. I was going to try to jump back to the pricing slide real quick, but it's a few slides back. I might lose it. But when you're thinking about distributing those tax forms, there's, you know, the later you wait in January to distribute those, the higher our price goes. And I don't know if I mentioned it earlier, the mail service team was also something that I had the privilege of running for a number of years. And I mean, literally printing and mailing 2 million plus tax forms within a 30-day period. It's wild. We started unloading some paper yesterday, so it's already gearing up, for that. And spoiler alert, this year too, there's a paper shortage, not a toilet paper shortage. We've had that, but this year's just an actual paper shortage. That's been interesting for companies. Fortunately, we had to drive to Texas or Oklahoma rather, but we were able to get a supplier. So getting back to the question though, when you're going through that mail service distribution wizard, you can specify which tax forms you want Greenshades to print and mail for you. So you could say, hey, I only want the forms that haven't been viewed electronically or consented to be viewed electronically, and that's fine. You can have Greenshades print and mail all of them, or you could filter out by certain groups or however you wanted to do that. So as you're going through the process, you can create different batches. You can submit them on different dates. And so what I mean by that is that in early January, if you have 20% of your population that's already consented, to be viewed electronically or whatever, but if you have a higher percent or another percent that they'll never go online to view that, you can go ahead and issue those to Greenshades and say, hey, Greenshades, go ahead and print, this group of W-2s that I know are never going to be viewed electronically, and I want to get in on that low price point. And then you might have another kind of bucket of employees that you say, hey, they haven't consented yet, but I feel like if we jump on them enough, they'll consent before the end of January. So maybe you'll hold back a little bit later, and then whichever other ones trickle in, that never get done electronically, you can submit those more towards the end of the month. So it's just a matter of trying to find that kind of the pricing strategy that makes the most sense, that you can distribute those forms in the most cost-effective way. And that's something that we're happy to talk through with anybody. So if this is your first time using Greenshades and you're not really sure about the timing, we're happy to talk through that with you. And of course, SIS has dealt with that with a lot of years as well through Greenshades. So we have a lot of flexibility around that, just to try to keep that cost as manageable and predictable as possible for you in January.
Great. Well, I don't show any other questions at the moment, but wanted to take a second as we close out to again thank everybody for attending. Hopefully this was some helpful information for you as you prepare for your year end. Up on the screen, obviously, please reach out if you have any questions about the content or about working with Greenshades. Please reach out to the SIS team. We've got Debbie's contact information here. We'd be happy to talk with you, answer any questions, take a look at your processes. Just reach out to SIS. And again, thank you so much for the SIS team and allowing us to take this hour with everybody and to talk to you about year ends. Really appreciate your time. Have a good rest of your afternoon, everyone.